Hello, Warriors. Fed week. Things continue to escalate in the Middle East. Hi, Michael, Bran. Yeah, there's the war, not only in trading, it's happening with drones in the air. AJ, James, Paul. Hi, K-Man, Sinatra. So, K-Man, what's going on? What are you thinking here?
Good morning,
And
Dale. Good morning,
good morning.
everybody.
Yes.
What's going on? Euro a bit under pressure this morning.
Yeah.
Several factors. It's pretty weak on the cross side as well as versus dollar. We're about testing those lows again. There's so much happening this week, but it's a fact that euro is feeling a bit of heat. The The ECB doves finally came out of hibernation, it seems. We've had De Guindos, Villeroy, Centennial. Even Casimir was not as hawkish, perhaps, as he may have been. And now there's a few things weighing on the euro to start the week. They're also a bit of disagreement on further Ukraine support. Hungary playing up
Yeah.
and EU threatening Hungary.
Cutting off funds.
Sorry?
I read something about cutting off funds. I don't
Yeah,
know.
but Hungary is trying to veto stuff, and the rest of the European Union is not too happy about it. Is also there's those troubles in the Red Sea. Some
Yeah.
there's uncertainty about the supply lines between Asia and Europe. Yeah, there's quite a bit hanging over the euro's head right now. So that's the reason why euro is starting the week, yeah, on a weaker footing. But for the rest, we are waiting, right, for what's to come this week. A lot will be going on. Central bank meetings, U.S. Treasury announcements,
Yes. Yeah.
European CPI, you name it.
Okay. Cable's still holding up, but we're getting close to your buy point in euro pound here, aren't we?
Well, at least taking profits on the rest on the way down. I'm still a bit short that one. Yeah, but we need to respect that 84.90, 85.05-ish zone. We really need to respect it. And but in turn, a break could see a bit of a gap below. But I mean, we have the Bank of England as well, and job
Okay.
vacancies are starting to come off. Expected inflation is starting to come off. So this may be a case of the first part of the week still being heavy, and then perhaps a bit of a rebound into the Bank of England, and Bank of England then will decide on what we do with it next.
You have any expectations for the Fed, K-Man?
On the rates front, zero, but depending on what the US Treasury announces and the levels of the reverse
Yes.
repo, and there may be some things being said about QT if the Fed feels the need to adjust those earlier than expected. That is something that I'm going to pay close attention to when the FOMC comes around.
Okay. Um, I know that you're not uh, actively trading yen. Do you have a view on it? With it, so
Yeah,
far putting in a failing rally?
yeah, it did that 148 and a half, 148 three quarters is important, right? But I equally find it finding bits relatively soon. I'm again, it's going to be what's happening to the dollar this week. But imagine that the dollar comes out of the week relatively unscathed. I starting to think that we could revisit 150 on this one.
150. Okay.
Yeah, I think
And
so.
all righty. Uh, Looney?
Loonie 134.
Yeah.
134 is your magic level. For the shorter term at least. Held a couple of times really, really well. Oils are pushing higher, although struggling. The crude is struggling above $79. But seems that finally the market is picking up on the old story just that little bit. But for as long as 134 holds, it's a range, I'm going to say, with the top side is pretty well defined now, just below that 135 and a half. And I think that's really your range, 134, 135 and a half. And then if it breaks, it's probably going to put in another big figure, at least on either side.
Okay, I was looking at Bitcoin, and to me, this could be a failing rally. You know, this was 10 grand. So, you know, we this was not quite halfway back, but you know, if we break 10 grand from here, that's 32, and uh, this look I think is pretty compelling on the weekly, where both the 50 week and 200 week come in above 30.
Mm.
Almost looks like it could be a magnet. Anything to say about risk?
Uh, I I find it still holding up very well.
Yeah.
The market is still. I thought we would be trading a bit more of those Middle East troubles at the start of the week, but only the market has only been trading euro really. We see all those euro crosses lower, but then real risk, because if you would go real risk off, you would see the equity markets losing more. You would see actually euro crosses typically run a bit higher, and but stuff like sterling, for instance, doing better than the euro. Commodity currencies doing better than the euro. That still tells me that the market is not trading risk off. It's not, and
Okay.
and real risk off in a case of geopolitical very hot geopolitical issues should see stuff like gold going up as a safe haven or a refuge for money, and it's not right. We can't get or hold above those 2040s. Still very rangy, that stuff. So that tells me that the market is still not on board with risk off. Or any of those Middle East or broader geopolitical issues.
Yeah, the VIX would argue with you a little bit. I mean, it's gapping up today, probably on that. But
Yeah.
you know, we have made consecutive higher lows with S&Ps making consecutive higher highs. Um, I was looking for USD MEX. I don't remember where I have it there, but are you long USD MEX?
I
Because
no, I don't have anything in mix. I mean, the only thing is that sporadically I'm trying to get short Euro mix again for as long as the bank cycle doesn't move. But today I didn't have anything because Biden was threatening to close the border if the migrant situation gets worse. I would have thought that the mix would have been a bit on the defensive today, but to open the week, but nothing, nothing. No, it's very relaxed. All of that. This market is very relaxed about a lot of things, and I'm not saying it will turn
here it is.
anytime soon, but the day it turns, it's gonna turn for good or for a longer period, and
Yeah,
it's gonna go hard because it's so relaxed, this market, so
yeah.
relaxed.
And you know, I mean, I looked at the weekly USD MEX and it looks pretty good. I mean, you know, we had this initial rally and so far we're putting in a higher low, and if we clear some overhead resistance,
Mm.
this thing, I mean, just to have a, you know, a retrace from 25 to here, or, you know, come back and check the big breakdown, I don't think is out of the question.
No, of course
So,
not.
yeah,
It is no, it's not out of question at all. But when is the market going to trade it? Because for the moment, it's like really a storm in a teacup, right?
yeah. Well, never short a sleeping market, but
Mm.
I think that the lows that we put in here uh, are going to hold. I'd like a chance. Maybe the Fed delivers that opportunity around 17
Mm.
to try it and go
Yeah,
wrong under these lows. And
yeah.
you add on a breakout. So here's a daily. So, we have a lot of resistance on the weekly here and on the daily here.
Mm.
And I don't
Yeah,
know, there's a lot of compression. It feels like a lot of compression building
yeah.
up to me.
That
So
1740-45 zone is always a zone that has been monitored and traded, and you see those spikes, you see the lows before, you see the spikes even in the, like earlier last year, right? May,
yeah,
July, August. There's always been activity around that level. So that's really your level. If it starts to break above 1745 and get a foothold, then you're probably going to go back into the 18s. But until it happens, that's
yeah,
always a thing as well with those with such an 11% currency, which still benefits from nearshoring, despite what they may say about the migrant situation. But um, be sure that 11% currency for a longer period,
hmm
the funding bites very, very quickly, unless Mexico starts to cut rates. But that's another week and a half from now. So.
Okay, I got a message on X from a former floor trader at the CME that I've talked to
Mm.
before, and he said, Dale, I had a flashback that back in 2000, um, the downgrade of Intel was the beginning of the decline in Nasdaq, and that just happened Friday. So I mean, here's a guy with market memory of past things when they turn bad. That this is not a bullish sign. I'm not saying the market has to sell off from here, but I take that seriously when someone
Mhm.
has seen history, and the same thing happening again. Doesn't mean it could rhyme, and all the old stuff hasn't worked anyway. But that's something to keep in mind, because look at what it did from October. So I mean, it's got a lot of people trapped. Intel. And anyway, just something I thought I'd throw out there from a veteran trader, just to give you guys, a little grain of salt on risk. So, Blake, how was your weekend? Was beautiful out
Good
this
morning.
weekend?
Good morning, guys. How are you?
Morning, Greg.
Yeah, good, bro. It was beautiful out this weekend.
It was. Now we'll take the good weather while we have it, because
Yeah,
by the end of
I
the week
know.
it should get a little bit more sour. But
Oh yeah, we're going to have an atmospheric river. They don't call it rain anymore. They call it rivers.
is that what they call it over there? That's interesting.
Yeah,
Uh,
atmospheric rivers.
so everything's good. There was as came in. Good morning, by the way. You were talking about a lot of the things that are happening over the weekend. There was a lot of headlines. First of all, the three service
War.
members in the
Yeah.
US,
Jordan.
that were killed in the drone attacks. I think there's been some pushback from Iran saying that they have not, it's not them, and it's some rogue militant groups or something like that. So maybe that's subsided a little bit. But yeah, you guys are all talking about the risk and in the markets, and I'll take over the charts.
Okay,
I mean,
buddy.
the thing about the markets right now, when you look around, you're like, well, yeah, the S&P is just sitting at 4,900. I mean, not a care in the world, right? As you said, K-Man, very relaxed. And stocks just don't really care. There's you got, even in China, and I
Yeah.
think the Hong Kong courts have ordered Evergrande to liquidate. And this is the biggest Chinese developer around. So that's crazy. That hasn't done anything. You've got you've got things in the Middle East that are obviously still very hot, and the markets are just they just shrug their
You know,
shoulders, which
my takeaway in the Middle East, Blake, is that every day we keep naming a different country where there's military action. At first it was, just Israel and Hamas, and then it was Yemen, and now it's Jordan, and it was Iraq, and it was, happening everywhere. So I mean, Jordan, we didn't hear about Jordan until this weekend. So it seems like it's spreading.
but the market doesn't care. Risk doesn't
Oh, yeah.
care. Gold,
Yeah.
you know, I think Kman just pointed out, gold doesn't care. I mean,
Well,
you know, we're not seeing anything really move. I mean,
yeah.
it's amazing how the market's just shrugging off everything. But
Yeah.
we've seen it. It's and you know, those of us that have been around in the markets for a long time have really know it's just one thing, whatever it is, whatever it ends up being, that all of a sudden the market
The
cares
tipping
about
point.
everything all at
Absolutely.
Right.
once,
Right.
right? It's
Absolutely.
like
Yeah.
nothing matters until it does. And then when it does,
Yeah.
everything matters. And so I mean, we got to just continue to look for the cues right now. This is a very, very big week in the markets. Obviously, I tried to stress that during the week ahead video that there's so much happening between the Fed. You got month end today. Correct me if I'm wrong, K-Man. Today is corporate month end, so
Yep.
there is expected to be some dollar buying today. We might get that
Should
coming in
be.
right now. But you know, I look at the euro and it's like I'd almost I'm almost
Buy
tempted
it.
to counter trend. Yeah,
Yeah.
get long the euro around the 108 level just for a move back up to 109. I mean,
Mm.
just because I
Yeah.
know month you have month end coming up and the dollar should end up being sold for month end. So you got corporate month end, which is today, where you get dollar strength, and then month end, which you get some dollar weakness. So theoretically, if you're looking at the euro dollar, you should see something like this over the course of the next couple of days. What are your thoughts on month end, K-Man?
Yeah, well, yes, and I agree with most of the calls that it should be mostly for dollar selling, barring versus the yen because of that outperformance of the Nikkei. But today, talking about corporate month end, and I've been saying the same thing in the room this morning. The last few months, we haven't seen much of it, and of course, it can always come back with a vengeance. But it's not something I'm going to really bank on. But today, especially today, it could show up, because then afterwards we are going to expect the FOMC, we are going to expect the Treasury announcements. There's a lot of stuff happening this week, so perhaps today we will see some of it. But yeah, it's one of those things that I always keep an eye on into the London fixings. And but it's such a big week this week. So much going to happen that can really make markets take a direction, right?
Yeah, and especially with the QRA, and that happens before the Fed,
Mm-hmm.
on Wednesday. So it's going to be a hell of a week. So yeah, you look at the open, and it seems kind of quiet right now, but it's gonna get really, really busy. We have a lot of big earnings. This is like a major week for earnings too. Dale, I don't know if you've seen all of I mean, this is like the meat of the earnings week. I mean, on
Yeah.
tomorrow we got Microsoft. I mean, we should probably pull it.
Yeah.
Microsoft, if I'm not mistaken, I believe the market cap of Microsoft is bigger than Apple. Is that correct? Did I read something like that this morning? I have to double check
I think
that.
so. I
Let me
think I
see.
heard that.
I read a Reuters headline. Yeah, Microsoft overtakes Apple market cap wise. I mean, that's huge. I
Well,
mean,
look at
and
Microsoft and then look at Apple. So, Microsoft has exploded while Apple on this run did not make a new high.
yeah,
So, it's still acting. I mean, it came off 180. If you're long Apple under 180, you cannot be long Apple. There's a lot of space underneath it.
yeah,
So
right.
I don't know. It might be the Canary
You
Apple.
got the
I sh
200 DMA right there too, but it's all
Yeah,
AI. Speaking of
yeah,
AI,
AI. What is
there's a
AI?
company, Dale, that the market is really watching, and they are reporting earnings today. And it's Super Micro Computer. Let me show you the company. SMCI, I believe is
Oh
the
yeah.
name of it. So this is an AI
Wow.
play. Right.
Wow.
They report earnings, and look at the stock. I mean, it's not a
Yeah.
huge company, but look at the stock and look at its move. So they're reporting earnings tonight, and it's going to be closely watched. It's going, you know, a lot under the radar right now, but it is very much a an AI play. So you keep an eye on this one because that's what's been driving, you know, Microsoft above Apple and everything else. Then you got Google, you got Meta this week, you know, so you got
Everything.
you know, Google's reporting tomorrow. On Thursday, if I'm not mistaken, we have Meta, and we have also Apple, Amazon. Yeah, where is Meta anyway? What day is Meta coming in?
Thursday after the close.
What's that?
Thursday after the close.
Yeah. So I was just looking at all of these. Yeah. So I mean, we have a lot of earnings this week. Amazon, obviously. So that on top of the Fed, on top of, you know, the non-farm payroll at the end of the week, and then on top of that, you've got every employment data point minus ISM services data, which we'll end up getting next week, but we'll get manufacturing data ahead of the jobs report. So it's going to be a mayhem, crazy week. Today's a little slow at the moment, but just remember, we're at corporate, like I said, corporate month end. So I would assume that the euro finds some support down here, but there's been some, and then on top of that, I guess we should probably talk a little bit about this too. There's been a lot of like very dovish comments from the ECB. You can just go cruise through these Live Squawk headlines and just look at all of the very dovish comments from the ECB members. What's up with that, K-Man?
The most noticeable was Villeroy yesterday, because he's been not uber hawkish, but he's a bit of a known dove, okay? But then he has been quiet or relatively hawkish and trying to push back for months and months. But this weekend, yesterday, he gave an interview to the French press, and all of a sudden his dove wings showed up again, and he said, like, any time is a good time now to adjust monetary policy. He says he doesn't want to pin a fixed date onto it. And then we had well, Centennial, he's a known dove, but then De Guindo started to be optimistic about inflation as well. So the doves came out of hibernation, as I say.
Yeah, I mean it's crazy. There's a lot of doves you know, driving the euro down. That's also one of the other reasons, like, okay, if I'm gonna play the dollar on the short side here, I don't know if I necessarily want to do it against the euro, maybe play it somewhere else. But anyway, lot of very dovish comments overall. So real quick, Dale, you know, you got the S&P, you know, nudged up against its highs. Sure doesn't look bearish, does it?
It looks kind of like a triangle developing for another thrust to the upside.
Yeah, I mean, you know, we're in these markets right now where, you know, you're at all-time highs. Bad news is not bad news. You know, good news is good news. Bad news is not bad news. And, you know, and we are consolidating, as you pointed out, we're consolidating right up against, you know, some pretty key levels. You know, if the markets can get past this week and unscathed, and we can maintain these gains, this is where you start to go into blow off top territory if it doesn't start going down soon. I'm just,
What do you think of the VIX chart? Let's see your VIX chart.
well, I mean, it's just hovering around that support zone, right? You got to get above the 200 DMA. I drew this, I think, this weekend.
It's a nice
This
base.
weekend or Friday, I can't remember, but you have to get above the 200 DMA in order for me to get excited about it.
It's pretty nice base. So you don't take anything out of the fact that S&P, like you were saying, nothing stops the S&Ps. They keep making successive new highs.
Yeah,
and yet
man.
VIX has not made a new low in about 8 weeks.
It hasn't, but I mean, okay, just let's backtrack a little bit and look at VIX going back to what, 2018. We're at same levels we were at 2018. Has the stock market made new highs since 2018?
A couple times.
Yeah, so then that makes this irrelevant, other than the fact that we're just sitting on support. We could sit on support and still be divergent and sit here, and the S&P trade at 5,200, and we'll be like, but the VIX hasn't moved down. You know, that's going to be the same conversation we're going to have. if the
All right.
S&P.
Well, okay, we'll see.
Yeah, look, I understand it's at support, and if I was long, it would definitely be something I'm watching. I guess
Yeah.
what I would really get concerned with is if we broke above the 200 DMA. It showed
Okay.
you already this
Yeah.
month how important it is.
Yeah.
So until we break above it, it's
Okay.
not relevant. If it
Okay.
breaks above it, then we start going, oh, market's carrying a little bit. I
Yeah.
think that's it. So.
Then it's hard to chase.
Well, yeah. Well, I think volatility is cheap. I mean, if you like, if you are looking at this week and you want to hedge yourself,
Yeah.
um,
Maybe
why
that's
not?
what's going on.
Why not buy some VIX calls as a hedge? I mean,
Yeah.
it's like your downside is very limited at this point, and if you want to protect any long bets, just buy some cheap vol. I mean, that would be it. I think that's
Yeah.
a great trade for those of you that trade options.
Yeah.
So anyway, but
That's
looking
what
at
I'm doing.
stocks, I mean, you got the S&P up here. What are you thinking right now, Dale?
Well, I
Other
mean,
than consolidating?
all last week we were talking about the big divergence. I know it didn't break yet. And maybe there's 5,000 in it, but I more or less stalking for a reaction, not a crash, but a reaction I think is possible back to 48, and that's going to be a big test to see if it can hold 48. So, you know, uh, I'm just saying that before there were not these divergences, right? And so things have changed a little bit with non-confirmations at these new highs. So it's
Yeah.
at least a warning. And if I was long a bunch, for sure I'd hedge. And there's nothing wrong with bringing the register either on long stock positions up here.
Yeah. Kman, big week this week.
Mm.
What is on your radar this week?
A lot of stuff. I'm getting a headache when I think about everything that I need to watch this week, because you have European CPIs as well are going to hit the wires this week. We've got the JMMC OPEC going on this week as well, with oils trying to push higher. That may have an impact as well. But as I said, if you look at the 200. Why don't you have that 200 DMA right above 79? Why do you have it in the 77s? Was I looking at the wrong one, perhaps? Perhaps I was looking at the wrong one, because I was looking at it and I saw it somewhere in the 79s, and I said, like, look, it's kept up there. Perhaps I was looking at the 4 hour or so. But anyway,
Maybe.
there's those levels in the 79s there, which are relatively interesting because that's where we kept last time, yeah?
Yeah.
So that's going to be an interesting watch as well. And then, yeah, the euro is one thing with those CPIs, because if those CPIs continue to come down, we've got French, German, Eurozone. If they continue to go down, everybody will recall what the Doves have said over the weekend and this morning. Yeah, those are things that I'm particularly going to watch. And then, as I said as well, the sterling could be an interesting week because it's doing better than the euro. It's more elastic and easier to bounce even for the cable than it is for the euro dollar. But then we have the Bank of England on Thursday, and they have the power to throw it all out of the window as well. So. There's lots of stuff to watch this week if you're trading FX or even other instruments, right? The bond market will likely be on the move on the combination of the U.S. Treasury and the FOMC as well.
Yeah, speaking of the 10-year, so I mean we're sitting in this bull flag pattern, just hovering around here's the 50 DMA and the 200 DMA, and you can see we're just kind of consolidating around here. Everything looks ready to explode, and that's I think the biggest takeaway from this weekend and from what you're seeing right now is the markets are consolidating. I mean, you look at the dollar index, I think is a great example. You can see the bond market right here at the 10-year, but you look at the dollar index. We have consolidated here in a very tight trading range around the 200 DMA. Yes, we have a bullish inverted head and shoulder pattern trying to play out, but regardless, you can see that while we're above 103, there's no reason to be bearish. But at the same time, we break out of this very tight range that's right here. We break out of this very tight range, we can explode. And it will prove dollar bulls wrong if we get back below 102.80. Flip side is we get above 104 and this thing's going to just rip. And I think there's a lot of people trying to stand in the way of the dollar right now. So yeah, very tight consolidations. My assumption is we are breaking out this week. Which direction we go, we'll obviously soon see, but there's so many moving parts, as Kman has pointed out, that you got to just be on your toes this week. I can't emphasize enough how big of a market, or how big this week's market is going to be. So, and we'll be here with you every day, right here on the F.A.C.E show. Dale, I know you have an interview, and I just want to say that if you guys haven't had a chance to jump into ForexAnalytix, do it, because this is where you're going to see Kman, myself, and a lot of other traders talking about everything market related right in our chat rooms. We got several chat rooms that you can go into. So make sure you hang out with us, because it's probably the best place to be right now, especially going through all of this data. You can talk to myself and other traders around about everything that's happening. So with that being said, Dale, happy Monday to you. It's going to be a big week. Look forward to cutting the rug with you all week.
All right, buddy.
All right.
All right. So do, Blake, and
little dance partner this week.
and K-Man, thank you, buddy, for your insights on a week where it's tough to have conviction. I just want to let everyone know, it's okay to wait until after the Fed presser to,
Oh yeah.
just have your levels, like, as Brian would say, ready to trade after that, instead of playing roulette on a binary day. So just something to keep in mind. Do what I say, not what I do. Anyway, I have my friend Thomas Malinan with us today, and Thomas, Happy New Year to you, and welcome back to F.A.C.E. How are you?
I'm fine, thank you. I'm
Good.
actually in Helsinki now. I was
You're
in the
what?
US for a while, but now I'm in Helsinki for, I don't know, maybe 2 months, and then
Okay.
board.
Well, were you on vacation here or business?
Well, 80% business, 20 vacation. About
Okay.
I came to check some places where I would like to stay next, and Nashville is the winner.
Oh, my sister lives there. You like it there? Okay.
Yeah, I really liked it. Everything
like
for a single man, there seems to be everything.
All right, now I know what you're talking about.
Yeah.
All right.
No need to say no more.
All right. Yeah. Now we're on the same page. So,
Yep.
what's on your radar for 2024? I know we're almost a whole month into it, but do you have a narrative that is something that you're keeping an eye on,
Well,
or trigger points?
but there are two basically what we are looking very closely. First is naturally the geopolitical situation.
Yeah.
Like the situation in Europe. Because I don't know, people in the US probably do not know it, but in Finland and Sweden, there is such warmongering going on with our politicians that I haven't heard such in my life. Like, I'm 47. I've remembered political issues from over 30 years.
Yeah.
And it's really crazy.
Yeah, I
And
read
so,
about Sweden saying that they're not prepared, and that the population has to get prepared for sacrifice and war, and it's like psyops going on.
yeah, it is. It is, because it makes absolutely no sense. Like, Finns and Russians, we don't have no issue. We haven't had any issues for decades. No
Yeah.
problems, nothing. This is purely a political thing. So
Okay.
it's rather worrisome in that respect. And then there's the situation in the Middle East, naturally.
Okay. And how about financial markets? Everyone basically says, don't buy the euro. Germany is failing and weak, and European, the dollar is a much better fiat to be in compared to the euro. It's a little different in the British pound. Is there anything you're seeing on the financial side in Europe that could be a black swan, like a problem with the bond markets over there or something like that?
Yeah, well, basically, the ECB has launched a program. I forgot its name, but they are keeping the bonds of the spread of the yields from breaking out. So basically, they buy in Italy now. But one thing people should understand about Europe is that the recovery fund will run dry this year. I think probably during the first half. And then the recession in Europe will truly start because it has pumped like several hundred billions of euros into Italy, Spain, Portugal, those countries. It has kept the European economy afloat. So I wouldn't, like I have been saying basically
The
all along,
pigs.
I would not
I haven't heard about the pigs in years, but that's where the weakness still is, isn't it?
breaks, you mean?
Pigs, Portugal,
Oh yeah,
Italy,
pigs,
Greece,
yeah.
Spain.
It's
Yeah.
still there. I think Greece is doing fine, but Italy and Spain, they're not. The economic number are just horrible. They could be much worse. But Germany is sinking, France is sinking, Italy and Spain are only, they are on this life support from the recovery fund. And when that runs out, the recession will truly start, and the fate of the euro will come to question at that point once again. So I would not trust the euro. So there's this constant risk of something cataclysmic happening. I'm not thinking they probably won't let it break the eurozone at this point at least, but still it's I don't think the economic weakness that the euro could escape it. And I think because of the economic weakness, the ECB has they have to start cutting rates basically, even though the inflation may actually go up from here again. So
Okay.
that's the thing. And the one comment about the Fed thing is that I would listen very carefully what they say. Or was it Wednesday or Thursday? When was
Wednesday?
The pressure? Yeah, Wednesday pressure. Yeah. I would listen very carefully what Powell says, because I will show you some graphs shortly. But
sure.
Yeah, for example, inflation expectations have not skyrocketed, but there's a definite peak in them already. The University of Michigan Survey of Consumers Inflation Expectations, and
you
never
could show these now.
Yeah, I will show this shortly, but never in the history of the series from '78 has the inflation rate failed to. The inflation rate has not failed to follow. So they are forecasting a something like a inflation over 4% again in matter of two months maybe.
Wow.
And if that comes to be, every hope of Fed cutting rates will go out of the window basically.
So that would be the big surprise with everyone looking for the pivot, not just a pause. But actually, looking for rate cuts by March, and we have the Fed this week that he might sound. I mean, he's got plenty of latitude to sound hawkish with the market at all-time highs, right? I mean, we're not there. The financial system, or at least the equity markets, have no fear right now.
Yeah, they don't, and it's crazy. But it's how they have been like grown. The equity markets have gotten used to that they will be bailed out every single time. So I think that's just complacency, which has been, grown into the investors or the psyche of the equity market, I would say.
Okay, were you going to show? Go ahead.
Yeah, you see this? The sinking feeling? Yeah, okay.
Yeah, got it.
And this is one of the things that is really interesting now. This is the bank term funding program.
Okay, that's when SVB failed and they put in this facility, right?
Yes, they put it on March 11th. And if you look at this, it does not look really good at the moment. You see this acceleration here. This implies that the bank run, the silent bank run, has accelerated again in some US banks. So this
that's
is
why they haven't. That it's an emergency program,
basically,
and and that's why they haven't terminated it
Yeah.
yet. But they may do that in March from
Yeah,
what some
so
of
they
my,
say. I do
yeah,
not believe it. I do not
okay,
believe it because if they would, there would be, I think the bank failures would start right away. This
okay.
is not like, this is not as, you know, it's not as steep as this, but this is still a notable rise. It was a like very stable for long, and then suddenly in December it started to head, you know, up again.
Yeah, they need liquidity. And the charts don't look terrible either on the regional banks. They could they've recovered pretty good. I think they have earnings. You know, do
But
you
the
think
thing is
there's
that
any
you, but the
go
thing
ahead.
is that you really cannot, banks, they are opaque institutions. If there's a run, you really cannot see it before it
Right,
becomes really visible. So
right.
this tells something that someone is in trouble, or some banks. That's the only kind of implication or conclusion you can draw from this.
Okay.
Only.
All right.
And the other thing is that there's the growth of loans and leases in US banks. This is the FDIC data. And if you look at where we are now, this here, this is a level, the banks, the loan lending is still growing, but at very low levels. And when previously, when this has been the case, the US economy has already been in a recession.
All right.
So
Yes. So
yeah,
credit.
that, yeah, and I think this is the one of the most important things. Like the US economy grew by 321 billion in the last quarter, but at the same time, the federal deficit grew by 510 billion. So you can argue that without this massive increase in deficit, the US economy would not have grown, or at least it would have grown very little.
So it's really nominal growth with the stimulus.
Yeah, massive stimulus. So this is record-breaking stuff, and it's completely unsustainable. They are projecting that at the current rate, the US annual interest payments will top 3 trillion in 2030. 3 trillion. Think about it.
Yeah.
So this cannot last. So it's my thinking that they will, because it's election year, they will try to keep this level of stimulus going. But if Trump wins in November, they will just cut it right away and crash the economy if it has not happened before.
Interesting. And why would they do it under Trump? Because he's not for the move to CBDCs?
For yeah, that, and because it's political rivalry, so they
Okay.
just want to kill it. But what is rather interesting, more interesting, is if you look at the commercial and industrial loans US banks are giving, they are actually declining. So the amount of loans going into corporate sector is dropping at the moment. And
Okay.
this has never happened outside recessions previously. And
All
if you
right.
look at the overall growth of non-financial corporate debt, it's at the recessionary levels also, albeit it's growing. So US corporations are taking debt from the capital markets, but still at the very low levels.
Why
So
are credit spreads blowing out on this at all? They're still so tight.
I think there is just so much money there, and then the complacency. So investors still have a lot of money,
Yeah, they do.
extra money, and the complacency. Everybody thinks that this will be fixed, and I'm starting to think also that we know that China manipulates the equity markets by buying. You know, the government is buying, or it's different. How hidden
Well,
branches are buying. Yeah, I'm starting to think that what if the same happens in the US through some mechanism? I don't know.
don't you
But
think that their buying power would be required more in the debt markets than in the equity markets?
probably, yes.
Yeah. Okay.
Okay.
Um,
So, but
I,
yeah, but the conclusion is that the U.S. corporate sector, lending to U.S. corporate sector signals that the sector is already in a recession. So the private sector, private corporate sector is in recession. That's my conclusion.
okay.
And the massive federal deficit and, you know, people spending it, it's just artificially keeping the U.S. economy afloat.
All right. I found someone more bearish than you.
Okay. Well, okay, that was a good.
I want you to check it out and get back to me and let me know what you think. It's called The Great Taking.
The great
Forex
take.
Gal.
Oh yeah, yeah, I heard about it.
Yeah, Forex Gal in our community sends me all kinds of things to make me nervous every day. So anyway, yeah, check that out and let me know. It almost seems like you know, it makes you feel like what's the point? But it's basically crashing the financial system with, you know, saying it was a cyber attack or something. They already have everything planned. But
Yeah, that's what they say, and it's we cannot just outright deny the possibility of that. We just cannot. It's possible that such a scheme has been devised, and the central bank digital currencies would be, yeah, they would. Something
that's how
like
they
that
usher it in.
Yeah, something like that is required to get people to accept the CBDCs. Something like that, something horrible, because otherwise I don't think the US populace will you know, accept. So
No,
but anyway,
there'd have to be a lot of fear.
you know, I talked with one of my friends who is well, he's a senior central banker now here in Europe, and just 2 months ago, and he said to me that a month ago, he said to me that there's no, he doesn't understand the CBDC. No one does in the actual, you know, the central banking economist community. And he told me basically that the people who are now in the board of ECB, the actual central bank economists, they privately, they say that the central bank digital currency does not make any sense, but publicly they support it. And then just, you know, there's massive political influence now coming from somewhere to central banks, because they are living like they have like two narratives now. The one they present to themselves and are the economists, and then there's the public one. It's a crazy, it's a batshit crazy thing, really.
Yeah, it sounds like politics here in the U.S. too. You know,
Yeah,
people will support and someone, but really maybe months ago did not support. So anyway, the CPI.
yeah.
Do you
So
expect? Go ahead.
Yeah, the pace of inflation accelerated 3.4% in December, and it was the fastest pace of, you know, the analyzed growth since May. But if we go to the inflation expectations, it's the blue line here, and you see a notable spike there.
Yeah, yeah.
And if you look at the series, if there has been a spike, the CPA growth rate or the pace of growth has always accelerated, and that's what's expected. And the disruptions in global trade in the Middle East are now becoming very noticeable. Like container shipping rates are spiking, fuel tanker rates have tripled since beginning of the year, while all tanker rates have been spiking since October.
Let me ask you this about these rates. I was thinking about this. Do the shipping rates offset any of the good part of oil prices being fairly tame, especially in the face of what's going on?
Yeah, this is not my or our specialty, but that's probably how it is.
Okay, so I mean, so then if oil prices ever went up at the same time shipping rates were going up, that would really be a problem.
Yeah, and now it's happening. Both.
Okay, yeah, we've seen a little, we're at $79 right now.
Yeah, so but it has like reversed. I just look at the time series. It has reversed the decline, even though at least the OPEC says and that the demand is lacking.
Yeah.
But the really big thing now is that what they're gonna do with Iran now that the U.S. soldiers died. I don't think they will do anything. Biden administration will not take any drastic.
They don't want the war. Yeah, they don't want the war.
It would like Iran holds all the cards there. Like if they would close the Strait of Hormuz, then it just would be game over for the global economy. Like it's so important for the energy market. And there's one interesting thing here mentioned in the bottom here is that Qatar canceled one LNG tanker to Italy because they would be forced to go around the Cape of Good Hope, and it would make the shipment uneconomical. So it's not you cannot economically deliver LNG through the Cape of Good Hope to Europe. And
well, are they going to turn? Are they going to turn to the U.S., which Biden recently put a pause on new projects for natural gas?
I don't know. But this, if the war escalates in the Middle East, this will become a major headache for Europe. If not this winter, then the next.
Well, last winter Europe was going to freeze and starve. How's it going this winter?
Well, last winter we were saved because
by the weather.
Yeah, extreme mild weather. Now it's been quite the opposite. I don't know actually what's going in Central Europe, but what I hear that there are like these warnings, electricity warnings. We actually had a grid warning in Finland too, which was first time in my life I heard there was such. It's the first stage where the FinGrid, which controls the grid, asks corporations to voluntarily
reduce
electricity consumption. And this was done. There was no public discussion about this. I just heard from one of the big landlords in central Helsinki that this was what was asked. So we had a first grid emergency for, I don't know, since the war, so for a very long time.
Wow, that's something. And you know, these data centers that they need for AI and everything, they're like quarter mile or a mile of buildings. They sure require a lot of juice.
Yeah, they require
many megawatts.
Yeah, a lot. Yeah, and I don't know how they're gonna supply them
along with the EVs too.
That's also one crazy idea that they would use them to balance the grid, which is just nuts. No, it's just it's been like in Europe and I think in the US too. You know, Finland had a lot of like emergency power, electricity factories, and they have all basically been destroyed during the past 20 years. It's crazy. Like the reserve power stations have been deliberately destroyed, like destroyed completely with the explosives. It's nuts.
Wow.
Yeah, and same in Germany. So I don't really get how
it's like they're trying to drive an energy crisis.
Yeah.
To get us off carbon. I don't know. Huh?
I don't know.
What are your conclusions? Hide under the bed?
No, I think we just have to fight back because it's people just need to understand how bad the situation is that we can start correcting that.
Yeah,
I think so, but going somewhere like off the grid is not a bad idea, but I think we have to try to turn this ship around, which I mean the ship is the Western world basically.
Yeah, so we need lawyers to change some of the laws that they slipped in. Number one, like making what we think is our property really our property, like our deposits in banks are not ours.
Yeah, so it seems like for a period of 3 years, some of the wealthiest customers have been telling me that they have problems of getting their money out from Nordic banks. Wow. Finnish banks. That's something. It's worse in what I hear in France and Germany. but it's not like the banks, they just hold our money. That's it. That's what they should do. Of course, they they cannot. Well, it's a fractional reserve banking, so it's a they don't have all the money there. But it's like a contractual guarantee that we give them the money and they agree to give it back. And now it looks that the money is not ours anymore, which is crazy.
Yeah. Yeah. So anyway, this is what we have to deal with. And anyway, I want to wrap it with this. Remember all the derivatives from the great financial crisis?
Yep.
Okay, they were never, they were just all taken off the books. I mean, those losses never went away. I've
Yep.
heard that they're all pooled and
Okay.
that, that they are being supported by the Fed. And
Oh.
eventually, those derivatives that everyone thinks just went away are going to have to be paid off. And that's when they need
You know,
the money from depositors to do it.
we heard from several central bankers that in Europe they just discontinued the mark to market.
Yeah.
And they are just rotting in the balance sheets of European banks. And Credit Suisse was probably one of the casualties of that. But you have to, at some point, you have to write them down.
Right.
So, yeah. And when it may come to at the worst possible time, like
it's like
in the US and in Europe.
Yeah, Europe probably first, I'm thinking, then Asia, then
Probably.
the US. It's like there's a time bomb out there from 2008.
Yeah, there is because we didn't fix the issues then.
And
We
no one
didn't fix
even
the bank
talks about it anymore. Who talks about derivative risk anymore?
for one, for some reason. That's a good point.
All right, so basically, don't wait to buy gold and wait. But are you a little disappointed that we tried to break out and so far it wasn't successful in
Well, I
gold?
don't know. Yeah, it's the gold manipulation is becoming rather obvious. So we don't. The problem in investing now that you don't know what markets are manipulated and how much.
How
That's the
about all
biggest.
of them?
Probably, yeah, but they don't, I don't think they have money to control everything. They just make these probably surgical strikes. But that's the one thing I think people need to really think of in investing, that so many sectors are supported by either just money from the federal system, or then some political ideology which may change, and then the whole sector can crash.
Okay, how do our viewers get your newsletter, Thomas?
Just Google me, Tuomas Malinen Forecasting Newsletter. It's there. You can find it easily.
Okay, so include Thomas in your intelligence gathering. He's your boots on the ground in Europe until he buys a pair of cowboy boots and moves to Nashville.
Yes.
Yes. All right.
Yes.
Anyway, my friend, thank you so much. And I want to thank you for over all this time. We've been talking for years now.
Yeah.
Of you coming here and sharing your ideas with our community and edifying them with your views. So it's appreciated.
Nice to be here. Always nice talking to you.
All right, Thomas Malinen, everyone, at MT Malinen on X.
Yeah.
And I'll get a hold of you and we'll talk in the spring if we're still around. All right, buddy?
Yeah, will do. Will do.
All right. So that's a wrap, everyone. I could join the team in 16 minutes on the Morning Edge. Thank you, Thomas. People enjoyed it. And I'll see you tomorrow for Turnaround Tuesday. Let's have a good week while we can. Anyway, I'll see everyone tomorrow. Don't just count your pips, count your blessings. Adios.